Amaz, thank you very much for that. Those are individual moves and what's happening out there. We have Ajay Khandelwal who's with us, fund manager at Motilal Oswal Asset Management Company, manages a range of equity hybrid schemes. Ajay, great to have you with us here. Thank you for joining us. Market may be whatever it is doing, but I was checking out, looking at some of the stocks you own in, some of your funds, names like, CCL Products, Shelley Engineering. It's been fantastic going for many of these companies, actually, as I'm looking at it. With full disclosures, etc., I don't know if I can entice you to talk a little bit about Shelley and broadly run us through what the logic is and what prospects are. And of course, not to be treated as a buy or sell recommendation.
Yeah, hi. Thanks. So again, sorry, can't speak about individual stock, but if you look at the space, for example, the GLP-1, I think we have spoken about it before also. So if any business which is part of value chain and participating in GLP-1, I think they are benefiting. Secondly, if any business which is engaged into durables, fast-moving products like mobile phone, so some of those businesses are seeing traction. The order books are improving. So I think any business which is to do with these two areas are doing well. Also, I think where we are focusing on is that we are looking at those kind of businesses which are kind of market leaders who have global market share and where they have seen some kind of adverse commodity cycle, and now that is reversing. So the working capital is improving and they are seeing profitability improvement now. So I think that is working for us, Prashant. And generally, if you look at our portfolio, you will find that we run concentrated portfolios. So whatever is happening around, I think some of these businesses clearly have no impact because of it.
Hi Ajay, good to see you in. This is Nigel on this side. But what's your take on the markets on the whole? Last 1 year, India has been a stark underperformer. And it's the largest underperformance you've seen in multiple years, even if you compare the Indian markets to the emerging market index. Do you think that we're getting to a stage where, in fact, it's either make or break, and which side would you be leaning towards? Also, a quick word on earnings growth, because we say the Indian markets are adjusting themselves, etc., but earnings are yet to show up. So do you believe second half of the year we'll actually get to see that earnings growth, the long-awaited earnings growth?
So Nigel, how we are looking at this whole situation is that I think from last September onwards, we have seen almost 5-6% kind of earning cut in Nifty. Whereas it's not that the globe, the other emerging market developed economies have seen earning upgrade. It's just that there is re-rating which has happened. Some bit of it can be a function of they have better AI plays and market believe. I think that businesses which are providing and dealing in AI or beneficiary of it will do well. But it's not that their earning upgrade has happened. Whereas for us, in last 1 year, we have seen earning cut. And now if we look at it, as you mentioned, compared to the global and emerging market, our market premium now are at 10-15 year low. So from valuation perspective, from earning going forward, we don't see any earning cut. So I think given the uncertainty for this quarter, but if you look beyond that, we are very well placed.
Ajay, I know you look at the jewelry space. There are some investments in Bluestone, Kalyan, Sky Gold. So again, not getting into stocks, but have you done any channel checks on the kind of retail demand we've seen this festive season, given the prices are at record levels? What are the footfalls looking like?
See, because there is almost 40-50% kind of increase, we expect that volumes are going to come down, but all in all, the overall sales numbers will still show 25-30% kind of growth. So I think this is what, as of now, the channel check suggests. And if you combine it with the festival sales for other discretionary products, which has happened last 1 week, we believe, I think it has surprised positively. Even though there was no GST cut on some of the luxury items, but even they have seen the kind of premiumization. So I think we believe the discretionary products, especially the higher ticket size products, will continue to do well.
The gold jewelry companies can sustain this 25-30% kind of revenue growth, even if prices plateau at these levels. It's still very expensive, right? 1.2 lakh for 10 grams gold.
So see, our understanding after talking to the managements is that people come with a certain amount in their mind. So if I have a budget of X amount, I actually go and spend that. So when you look at the volume growth, because the underlying commodity prices increase, you will always say that volume growth is lower. But it is the overall spend which is still increasing. The same is true for other industries where actually commodities they have seen deflation. So there the volume growth is higher, but the overall revenue is not so great. So that always is the case.
Yeah, I mean, is there a consumption over capex kind of preference you have, or this is all single stocks? I mean, doesn't matter. As you said, it's concentrated in most of the holdings, at least. And I'm not talking about large caps, but I'm talking about some of the mid and small caps. They as you said, they don't too much impact from what's going on around.
See, how we look at it is that with all the macro factors, which are those stocks and businesses which will be least impacted? Now, we have clearly a preference. So, for example, rural is doing well, and now we see that urban will make a comeback. So, we have added those stocks where now the urban presence is higher. Even in terms of, if you look at sectors, for example, maybe IT services. Now, we see that there are these uncertainties which will impact the near-term growth. But if you look at the business process outsourcing companies, the dependency is extremely low on some of the factors which are adversely impacting the services. So there, within sector, we have looked at those subsectors where the impact is low. Even in financials, if you look at, we have asset financing companies which are dealing into gold primarily. The other financials we have is on the capital market side. So, Prashant, our idea is always simple. We try to make a portfolio which is least impacted by the given conditions, and that is helping.
Yeah. Got that. More later. Thank you very much, Ajay, for joining us. Good conversation, as always. Appreciate it. All right, we'll take what we'll do is we'll get you the latest in terms of what's happening on the F&O space. How is positioning looking? Because that is always important to take note of. Nigel has walked across to that F&O desk. Nigel, over to you.
Well, the problem, Prashant, is all the technical